So let's begin the CA Inter Auditing and Ethics. If you see the subject name is like Auditing and Ethics. We have ethics related portion 5 marks, but still in the subject name it was given equal importance to audit. So ethics as a part of auditing, that's what we are actually discussing. Ethics itself as a separate subject is so big. Ethics itself as a separate subject is very vast and very big. But we are discussing ethics related portion as a part of audit with respect to audit context. Okay, so predominantly what we are discussing is auditing only. In the field of auditing, what ethical requirements are relevant, and that is what dealt under ethics related portion. And if you see the syllabus composition, we have totally 11 chapters. You can open the index also. We have totally 11 chapters. Okay, even in the ICA book also you are having 11 chapters totally. You are having totally 11 chapters. But the chapter numbering is different from our book and from the classroom discussion that we are going to do versus what is given in the ICA. Okay, the chapter number is different. For example, we have given second chapter, ethics in terms of engagement. In ICA book it is 11th chapter. Like that, some 2 or 3 differences will be there. For example, items of financial statements in ICA book I think it is 6 or 11, 6 or 7 some chapter. Okay, but we gave it as 11. So there is a specific reason why I am discussing in this order the chapter. Only the order is different. Content inside each and every chapter is same. For example, whatever is there in ethics and terms of engagement in ICA book, the same content is there here. Content we didn't interchange. The order of the content is same within each chapter. There itself it is covered. Okay, so only the order is different in our book. Okay, even when we are discussing also, even for our classroom discussion also, 99.99% I'll go in the same order. 99.99% I'll discuss in the same order. Maybe the 7th chapter is there, one topic called different types of entities. This alone I'll cover it at last, but rest all other I'll discuss in the order maximum. Okay, maybe depending upon how you're responding, how the level of command that we got on the subject, depending upon that I will slightly change the order. Okay, fine. But at the beginning, first we'll be discussing something called fundamentals, then the first chapter, nature, objective and scope, then ethics and audit report. So in the same order we are going to discuss. Now the learning objectives in this subject is fine. I'll start the first chapter. At that time I'll tell you the learning objective of the subject. Now for our exam point of view, first of all, we have to score 30 on 30 in MCQ. We have to score 30 on 30 in MCQ. No excuse. For that, if you listen to the classes carefully, that is sufficient. To score 30 on 30 in MCQ, listening to the classes completely and understanding it thoroughly. If you are able to do these two things, listening it carefully and understanding and analyzing it perfectly, damn sure you can score 30 on 30 in audit. The most fearful subject in group 2 CA Inter is what? Audit. So no, because of the theory nature, even if you write a similar answer you don't score. You might have heard, definitely. Even if you write a similar answer, you won't get the score. You need to write exact answers. This is what one of the notion that is there. It is not correct completely. I will tell you what kind of mistakes students actually do and why they don't score full marks. I will tell you the reasons. Okay, I will even show you practically why students, what the student actually gives the answer and what I say exactly expecting. Okay, that difference I'll show you. But for MCQs, you don't have to worry about all this. You just have to tick the answer. You just have to bubble the answer. That's it. 30 on 30 MCQ scoring is our primary objective when we are learning. Then remaining another 30 marks out of 70 marks descriptive paper is not a big deal. Okay, see, you will have a paper for minimum 114 marks. You'll have a paper for 114 marks, the paper composition. Out of this, 30 marks is for MCQ and rest 84 marks is for descriptive. In exam, how they'll give you is 14 marks questions of 6 they'll give you. And out of the 6, question number 1, there is no choice at all. Whereas remaining question number 2 to 6, okay, you have 2 to 6, right? Any 4 you have to write. Any 4 you have to write. See, like people say question number 1 is compulsory question. They say, what do you mean by compulsory question? There is no choice on that. That's what the meaning. It is not that if you do not write this question number 1, your paper will not be valued. No such meaning. Compulsory question means it does not have a choice. Okay, it does not, it won't be counted as a part of choice. Whereas out of 2 to 6, any 4 questions you can write, 1 you can leave it. There is no compulsory question in 2 to 6. There is no compulsory question in 2 to 6. That's what the meaning. Now all these questions will have 14 marks. This will have a 14 marks, and this question number 1 also will have a 14 marks. Now this 14 marks question is subdivided again. This 14 marks question is subdivided. How? 5, 5, 4. This is one combination which they ask. 5, 5 and 4. This is one way. There is another way also. 4, 4, 3, 3. There is another way of asking. 4, 4, 3, 3. It depends. From each attempt to each attempt, they might change it. Mostly they'll go with this logic only, but sometimes they'll go with this logic as well. Are you clear? Or they may give 4, 6, 4 also. Any combination is possible. Now the point you need to learn is the maximum question, the maximum weightage for any descriptive question is generally 5. Maximum weightage generally is what? 5 marks, which is a very good thing for us, because there are some concepts which are almost like more than 1 page in the book given to you. The book given to you, it is more than 1 page. If you write that answer completely on a paper, it will be 3-4 pages. But we don't have to worry, because maximum marks questions will be tested is for 5 marks, where you have to write 7 to 8 relevant points. What is it? 7 to 8 relevant points. If you are able to attempt, 99% you're done, you're sorted. Means you will get 5 out of 5. Able to understand? So we will discuss how should we write the answer, how you are not supposed to write the answer also, at few examples, at few instances I'll give example. So that alone, if you're able to understand, sufficient. So 30 on 30 MCQ through the class itself you can get. 100% I'm giving you assurance, through the class itself I'll give you 30 on 30 MCQs. Clear? That's it. Whereas 84 marks descriptive. So this is the theory paper, descriptive paper, composition. Confident? No. Now the next thing, for MCQ purpose, purpose, we have something called regular. In our online also, we have something called regular course. Okay, a student who enroll group wise regular, or a student who is enrolling subject wise. Okay, for him we give regular method of classes. What regular method of classes means? Their MCQ discussion will also be there, and their study material quick revision. For the first time I'm doing it. Study material quick revision. Nobody have done this. First time we are only implementing it. Using the ICS study material, we are also going to do a quick revision. Why this is important? This is most important for 30 marks MCQs. In order to score 30 marks, 30 out of 13 MCQ, you should have an exposure on the entire study material. At least a single reading you should have given on the study material. Only then you can easily crack 30 on 13 MCQ. So that quick revision of study material and MCQ session exclusively given for regular students. Apart from that, if you see, there is a question bank. We have a question bank also. So this is also 26 edition only, which is applicable for May 26, September 26 and Jan 27 attempt. Okay, so in this question bank also we have given 3 categories of questions. I mean 2 categories mainly. One, ICA coverage, like study material coverage, TYK questions, illustrations. If you see the ICA book, you will have, in each chapter you will have illustrations. In each chapter you will have test your understanding, or sometimes they call illustrations. And there is another category called TYK, test your knowledge questions. Able to understand? So that is called ICA coverage. So illustrations and TYK, which are fully included in this question bank. Then we are also having a category called MRP, mock test revision paper, past exam paper questions. Now for regular students, this regular course, in the sense like full audit subject, whoever have taken, or group wise whoever have taken regular, okay, for them this entire MRP questions will also be covered. Whereas there is some other category of students called exam oriented. The concept lectures are same. For us the concept lectures are same. There is no difference at all, because we cover 100%. See, today the definition of exam oriented has been changed. Once upon a time when we were studying, what is exam oriented? Skipping half the syllabus, not even half, 2/3 syllabus we used to skip. In each chapter, only important topics we study. In each chapter, for example, there are 20 topics in a chapter. We study 5-6 topics there. Like that, in each chapter, the 30-40% of the topics only we study, and we go exam, we definitely find those topics only in the exam. So once upon a time, exam oriented has this meaning. But today exams are like what? Any corner they are asking. From every corner they are asking. There is no exception here. Everything and anything within the book, they are testing it. So typically now, exam oriented means what? Today it can be exam oriented only if you are covering 100%. You are preparing exam oriented today only when you are covering 100%. So even if you call my batch, this particular session, as exam oriented, there is no skip of concept, because if at all I am skipping the concept, it is not exam oriented. Why? Because exam oriented means what? So that you can handle the exam paper well. Are you getting it? So that is exam oriented batch. So today exam oriented meaning has to be changed. People still, many students, without updating their knowledge about paper setting, without updating their knowledge about how the papers are being made today by ICA, how every corner they are testing, forgetting all this, they are thinking exam oriented means skipping of syllabus. No. In any subject for that matter, in CA Inter and CA Final today, if you want to know, I mean, if somebody is saying exam oriented, it means they should cover 100% syllabus. If at all they are covering less than that, that's not an exam oriented batch, that's a crash batch. Crash batch means what? We crash the syllabus. We crash it, like we remove so much of points, so many provisions, so many concepts, so many discussions we don't do. We crash the entire discussion and then give only limited content. That's crash course. Exam oriented means today it is 100% syllabus. Only when we cover 100%, it satisfies and justifies the meaning exam oriented. Clear? So, but we are also having two types of courses, exam oriented and regular. The difference between these two is, in a regular and exam oriented, concept lectures 100%, ICA SM's coverage 100%, whereas MRP category questions were there, right? MRP, like mock revision exams. For EVO students, exceptional questions only we cover. Exceptional. I'll tell you what is exceptional question when I started discussing question bank. I'll tell you. Whereas for regular, all. And one more difference between these two is, in ICI study material, quick revision, here it will be there, here it won't be there. MCQ quick, I mean regular batch, we discuss MCQs also, whereas in exam oriented, no. So that's it. Even normally, if at all some online students, whoever is watching, if you are having exam oriented, it is more than sufficient. It will give you reasonable assurance. It will give you minimum reasonable assurance. But regular will give you 100% assurance, because we are discussing MCQs. See, when we discuss MCQs also, what is the point? I'll tell you. It's not about figuring out the right answer. In MCQ, some students, they'll be happy if they find the right answer. They'll proceed. You should understand why remaining 3 is also wrong. Why remaining 3 is wrong. You should understand why so and so option is right. Why remaining 3 options are wrong. You should have a clear, concrete clarity on that. And when we are discussing those questions, MCQs, I will also discuss about if a particular word is changed in that question, how the answer will vary. That aspect also we are discussing. So there, it's not about MCQ discussion, is not about figuring out the answers. We use ICA study material. ICA has released something called MCQ booklet, where 35 case scenarios they have given. We'll be solving those 35 case scenarios. What we'll be understanding is, it's not about answers, it's about the analysis. So when you're studying a case, when you're reading a case study, how we should decode it, how a particular sentence in the case study, if it is changed, how the answering pattern will change. That analysis is most important. Like we study first each and every chapter provisions, right? Concepts we study, right? That concepts we need to apply. So when we are learning MCQs, when we are discussing MCQ, the most important thing that we discuss is application. It's not the answer. Identifying answer is not a big deal. But application of the concept that we learn, that is what most important. And when you see MCQs, 35 case studies when you solve, you will understand how a same concept, something that we know, is tested differently in different ways. See, some concepts, when you see some concept, or when you read, or when you understand the concept, you generally see that from one perspective. But when you solve MCQs, you get a different perspective on the same concept. Like a different dimension, they're testing it. So that skill is what we are learning in MCQ discussion. Clear? Now, so approximately what I am thinking approximately is total duration of audit complete, approximately will come 80 years. 8 years is for the EVO point of view. But I told, right, we do study material quick revision, approximately will be 10 hours. Approximately the study material quick revision will be some 10 hours. And case scenarios I told, right, that is approximately for 6 hours. And I told, right, past exam questions, MRP full discussion I do, right, that is approximately again 10 hours. So totally approximately 105 hours is for regular students. Whereas exam oriented students, it will be 80 hours. That's it. Approximately 80. Plus or minus in both the cases 5 hours. So this is the course structure, the audit course structure. Clear? That's it. So here I answered our EVO students and also who have taken subject wise or who have taken regular group wise. Okay, so I have given clarity on what exactly you get, what you don't get. That's it. So now by the way, this is the latest 2026 edition question bank. And in this we have given again the index, and we have given what questions we covered here. What are the how many questions are there in each chapter? We have given the list. Total we are covering 522 unique questions. Unique questions 522. They are not like repeated. No duplications, no repetition, only unique questions, totally 522, out of which almost 213 questions are ICS study material directly taken from. 300 questions, 309 questions are what we have taken from mock papers, revision papers, model test papers and past exam papers. First of all, what are the various resources the institute releases that are important for us? One is of course study material, which contains concepts, illustrations, test your knowledge. Okay, then the ICA will release something called, for every attempt, MTPs they will release. For every attempt 2 series they will release, 2 series of MTPs they will release. Then for every attempt they will release something called RTP. Now ICA is releasing yearly once model test papers. At CA Inter we have totally 8 model test papers. We have totally 8 model test. In this model test paper, nothing big, there is nothing new to discuss. Mostly they are covered from MTPs and TYK. Mostly they are covered from MTPs, and of course another most important resource is past exam papers. So this model test paper is just covering past exam questions and RTP, MTP questions. That's it. So in model test papers there are no new questions, but still we did entire research on model test papers and figured out few new questions, and we added in the respective chapter. So if you're following this GOAT notes which I'm giving you and the question bank latest which I'm giving you, you are done. You don't have to look at MTPs, you don't have to look at RTP, you don't have to look at past exam papers, nothing. And at the beginning session itself, I wanted to tell you one more point. The moment once you finish the class and start preparation, you will be definitely interacting with many other students. Okay, they will be unnecessarily confusing you by using resources of past 10 years, past 15 years. Some students, if you meet them, they'll tell you past 10 years papers I'm studying. One question bank they will show you past 10 years, 15 years attempts they will show you. Complete waste of time. And in fact that's a worst mode of preparation, that's a dangerous mode of preparation. Why? I'll tell you. Because right now what we are studying is something called new scheme, which is released in 2023. The new scheme, the syllabus that we are studying right now, the audit syllabus, this syllabus is finalized by the institute in 2023 year, and that syllabus we are studying. And that syllabus related first examination happened in May 24. Now you are writing May 26 or September 26 or Jan 27, right? Now this 2023 syllabus is different from the old syllabus. Earlier there is another syllabus called 2017 syllabus. What is the syllabus? That is 2017 syllabus. That was applicable from May 2018 to November 2023. Some students with ignorance, they solve past exam questions of these attempts also, which is dangerous, because at that time the concept drafting itself is different, the coverage of standards are different, the syllabus is different. There is a huge change in the old 2017 syllabus versus 2023 syllabus. There is a huge change. That's why I never recommend my students to touch these resources, because those times the concept discussion, that elaborativeness with which the concept is discussed, the depth in which the concept is discussed is different. But now the concepts are discussed in depth. Those times, no, in 2017 syllabus, which is applicable for 2018 to 2023 years, the time the syllabus, no, it's very brief. They cover so many points at a brief level. Many standards, we have something called auditing standards, many standards that were there in our syllabus right now were not there that time. So you will not get any benefit when you solve these past exam papers and all, because audit subject has changed drastically. Even for other subjects I recommend the same. Even for other subjects also I recommend the same. You first cover May 24 onwards, because you're writing what, May 26 attempt, right? From May 24 onwards, how many resources you have? Model test papers. There is something called model test papers 8. Okay, May 24 attempt, 2 mock test papers, 1 RTP, 1 past exam paper. May 24 attempt question paper. Okay, so this is MTP, RTP and question paper, right? How many? 4. Same September 24, 4. Yes or no? January 25, 4. May 25, 4 papers. September 25, 4 papers. Jan 26, 4 papers. Suppose you are writing May attempt, May 26, 2 MTPs will be there and 1 RTP will be there. Yes or no? Totally 3. Assuming question paper you don't know, May 26 question paper you don't know. Suppose you are writing September 26 attempt, then May question paper also you know, and September related to MTPs you know, 1 RTP you know. Imagine. Okay, so how many resources you are covering? 4, 8, 12, 16, 20, 24 plus 3, 27, and model test papers 8. How many? 35 resources you are covering. 35 past exam papers, MTPs, RTPs you are covering. Tell me what else is required. First you finish this, then think about the old one. Most of the students, they worry about, should I cover that, should I cover this, first cover this basic thing, then you think about that. So if at all you want to solve, still you want to solve, your mind is saying no, other students are also solving, some other students are also trying to solve this and they're solving this, your mind is saying you should solve it, you solve it. But when after finishing all this 35 resources, once you get command on these 35 resources, you solve it. But I'll tell you, all these resources were covered in your question bank. All these resources we covered in the question bank that we gave. Okay, so, and in the question bank also, every chapter, if you see, we have divided the chapter into 3 parts. One is illustrations, another one TYK, and third segment MRP, mock, revision and past exam papers or question papers. Okay, so in each chapter the color coding that we have used is different. Okay, so here we have given attempt reference also. So we have divided everything into points and highlighted keywords. Even in the question also we have highlighted keywords, and there is something called exceptional. In some questions, no, we highlight with a word called exceptional. Some you see here, so for example, question number 15, this is exceptional. Exceptional means what? Very simple. This question, when you read the question, no, you remember about one answer, that you have to write this answer. You might be getting it strikes some answer for you, but the way how they narrated the answer here is slightly different. Generally, when you see that question, what you will be tempted, okay, you will be tempted to write something, but what is given in the suggested answer, it is slightly different. Okay, and technically speaking, your analysis is correct. The answer that you thought to write is also correct, but they have given a different version of the answer. Clear? So these kind of questions, we call them as what? Exceptional questions. So mostly we identified and kept it. If anything else that we identify when we are solving, when we are discussing in our class, all these questions when we are discussing, if we identify anything else further, we will let us point out here. Clear? That's it. So this is the entire, what exactly the subject we are dealing, how many marks it is being asked for, and how our course students are getting the resources, what we are all covering. First of all, what are all the sources that we are covering, what books that we are covering, and what else further you may have to cover. Everything I spoke. Clear? Literally the conclusion is what? You don't have to cover anything. So the books that we are giving, enough. Only one extra resource that you need to touch is ICI MCQ booklet. ICI has given MCQ booklet, right? That alone you have to touch. That's it, because that booklet is what used in our MCQ discussion. That's it. Confident? That's it. I'll just stop the video, then we'll start the actual first topic. Fundamentals will start. Yes, now typically the summary of whatever we discussed in our introduction, weightage and coverage, that discussion. So simply you will have totally 3 books that you need to cover, 4 books that you need to cover. One is the GOAT notes, which I'm giving you, okay, and question bank, both are 2026 version, and then chart notes, which is 2025 version. Okay, how to use chart notes also I will tell you in the class. Okay, once we complete a topic, I will use in the class itself how to use chart notes also. Then apart from this, you just have to use ICI MCQ booklet. That's it. And I told you in the MCQ sessions video, okay, like what exactly the booklet is. Okay, that's it. Now in the same GOAT notes, we have given some QR code, which is there even in the question bank also. The same QR code is there in the question bank also. If you scan this, you will be routed to the May 26 related playlist on the YouTube. In future, we'll be uploading revision classes, many guidance videos related to audit exclusively CA Inter. So all those videos you can find it here. Okay, MTP videos, all that you can find it here. So you don't have to trouble searching. So if you are having a book, you just scan it, you will get it. In the question bank also the same QR code is given. Clear? That's it. So I just want to summarize this. Okay, so I'll stop this video, then immediately we'll start fundamentals topic. So let's begin the first and foremost most important topic, fundamentals of auditing. You won't find this chapter in anywhere generally. This is something unique to us. Okay, like there are some terms that we need to understand. Before we actually start discussing the subject, we need to understand certain terms that are used throughout the subject. In this entire subject, these words are used. These are like definitions. These are like definitions. And by the way, I wanted to clarify one thing. If any of you are having 2025 version GOAT notes, nothing to worry. This is 2026 GOAT notes. Just a coloring alone is different. Only this header color and footer color has been added, and even for concepts also we just gave some different colors. That's it. Rest, content, everything, sentences, wordings, page numbers, everything is exactly same 260 pages book. Whatever the book that you are having, the same 260 pages here also. Okay, so no changes at all. So if at all you are having 2025 version GOAT notes and listening to these classes, don't worry about upgrading, not required. Okay, fine. So what is an audit? Like what exactly auditing is all about? What is the learning context that we are going to discuss? We are discussing the subject financial audit. We are actually discussing which subject? Financial audit. Because in audits, we have so many types. Financial audit is there, operational audit is there, cost audit is there, internal audit is there, energy audit, environment audit. There are so many types of audits. First of all, audit means what? What is audit? Verification. Audit means what? Verification. Suppose you're writing answers. Tomorrow you're writing exam and you're writing the answer. Somebody will verify your answer and then value it. Yes or no? We call him as valuationer, basically. Basically, he is one type of auditor. He is one type of auditor who audits your answer sheet. Audit means what? Verification, examination, scrutiny. There is another word called scrutiny. Scrutiny also means what? Evaluation, verification, evaluation, assessment. There are so many words that are there as a substitute for the word audit. So audit typically means evaluation. So which means, suppose if you are evaluating water resources, like consumption, or you are evaluating power consumption audit. Power consumption you are evaluating. That's energy audit. You're auditing, you're verifying environmental impact of your company. Suppose there is a company, how much impact it is creating on the environment. So that's environmental audit. So there are so many fields where audit is involved. So audit is there as part of our routine life. It's not something a new subject altogether. But we are discussing audit from financial statements point of view. We are discussing the audit subject from financial statements point of view, and that's why our learning objective is financial audit. Our learning objective is what? Financial audit. Again, we do audit. In reality, we do audit because of various reasons. One of the most important reason is statutory. What is it? Statutory means most of the entities and businesses, they go for audit because there is a requirement in law. There is a requirement in law. For example, you might have already seen in your law syllabus, P2, so in CA Inter Law, there is a chapter called Audit and Auditors, appointment of auditors. Some chapter is there. There you might have learned section 139, every company must appoint an auditor. And you might have learned 143, every company must get their books of accounts audited. Every company must get their books of accounts audited, and auditors should give an audit report. You might have seen like this, yes or no? So that is actually what type of audit it is called as? Statutory audit. Statutory audit means what? Audit mandatory under law. And that is one of the main reason why people go for audit. Apart from that, many others, even though there is no importance, even though it is not mandatory to them, they still go for audit, which is also called as non-statutory audit. Now, the financial audit that we are discussing, right? This subject is about whether you call statutory, whether you call non-statutory, it doesn't matter. What we are learning is what? How to do a financial audit. But when we are discussing the subject, we discuss it in which context? Statutory audit context we discuss. We assume that the business is compulsorily liable for financial audit. We assume that, and in that context we discuss. We don't discuss it from non-statutory audit context, we discuss it from statutory audit context point of view. But technically, what we are discussing is statutory audit? No, we are discussing what actually? Financial audit. We are discussing the subject called financial audit. Okay, but the context of discussion is what? Statutory audit. We assume that audit is mandatory. We take some business example, and we assume that business is compulsorily liable for audit. So in that context, we are discussing this entire subject. So what we are discussing is not cost audit, not internal audit, not operational audit, not management audit, not energy audit, not environment audit. There are so many types. Okay, social cost benefit analysis audit. There's so many audits available. We are not discussing from that context. We are discussing the audit subject from financial audit context. That too, from which context? Statutory audit context is what we are predominantly discussing this subject. Clear? Now what do you mean by audit? What do you mean by audit? Whenever I say audit word, it means which context? Financial audit context. Are you clear? They won't tell you in the subject. What do you mean by financial audit? They won't ask you. By default, our subject is discussed from financial audit context. They won't tell the word financial everywhere. They simply tell you the word audit. We need to assume that audit here in our subject CA Inter audit means what? Financial audit. Are you clear? Now let's look at one example. Just 1 minute. Yes, let's continue. And regarding notes, no need to maintain any running notes. It won't be possible also. It won't be possible. If at all, some students, they expect me to dictate the notes in the class. If at all I'm dictating, you know how many pages it will come? If at all, instead of the GOAT notes, if I dictate the entire notes, it will come 750 to 800 pages as per your notes. Because you're writing, no? And if I have to dictate and teach the class, 350 hours it will take to discuss 100% subject. 350 to 400 hours it will take. If at all I'm dictating and trying to finish the syllabus within 100, means I'm only covering 20% syllabus. That's it. If you want 100% syllabus coverage, dictation in audit is not possible. Clear? That's it. Some students know they'll be thinking, sir, why you can give running notes in audit also? In tax I do. In tax, no, I scribble a lot. In my income tax session, I scribble a lot. But in audit, it is not possible. If I start scribbling and then teaching you every concept, no, it will take minimum 250 to 300 hours. And consider, especially the online students who hardly watches 50-60 hours. Who hardly watches 50-60 hours. They don't watch beyond that. So my objective is what? Even though if they're watching 50-60 or worst case 70 hours, I should be at least finishing 80% syllabus within that time. At least they should be able to attempt 80 to 90 marks of the paper by just watching 50-60 hours of classes. So that's the main objective. So dictating, scribbling and all is not, don't expect that much, because if I do that, remember, we are skipping a lot of concept. If at all we are doing it in the classroom, means we are skipping a lot of concepts. So if that is happened, the subject will reach beyond 250 hours for audit kind of subject. That's it. Now, so what exactly the audit that we are discussing is financial audit, as I already told, and that too we are discussing from statutory audit perspective. Imagine a company called Reliance Industries Limited. Okay, Reliance Industries Limited. You know how many shareholders Reliance Industries Limited has? 20 lakh plus shareholders. Number of shareholders Reliance company has is 20 lakh. Within that, probably Ambani family is holding 51%. Okay, Ambani family is holding 51%, which means let us assume some 10 to 15 members of in their family. Let us assume 10 to 15 members of those family members were holding 51% ownership, directly or indirectly, through either a trust or through, directly by their individual family member names. Okay, either directly or indirectly, they are controlling 51%. Rest 49% holding is held by approximately 20 lakh shareholders. Within the shareholders, you will have retail investors, you will have institutional investors. Within institutional, you have domestic institutional investors and foreign institutional investors. Like what are all? Retail investors means what? Suppose you opened a demat account and you bought one share of the Reliance company, you are a shareholder. Yes or no? You are a retail investor. Now, some companies also will buy, mutual fund companies. For example, you might have heard of mutual funds, right? A mutual fund company will also buy, shares, mutual fund company. So they are institution. Mutual fund, no, is it an individual? It's an institution. So they are also investing. They are institutional investors. Life insurance corporation, is there, right? They are investing in stock markets. That is an institutional investors. But they are all belonging to India. So they are domestic institutional investors. Same way, foreign companies also, foreign banks, foreign mutual fund institutions, foreign insurance companies, they also institute in Indian stock market, and they're called as what? Foreign institutional investors. And if you observe, Reliance, in 24-25 financial year, for 24-25 financial year, their operating revenue, turnover, I can call it as turnover, consolidated turnover I'm talking about, the entire company group, Reliance group turnover, it's more than 10 lakh crore. It's more than 10 lakh crore. And their profit is also somewhere around 50,000 crore. Their profit is also somewhere around 50,000 or 60,000 or 40. I'm not sure about the number, but understand the context behind. So some 50,000 crore. So within this, typically Ambani family owns only 25,000 crore. Yes or no? Rest entire 25,000 crore is of public, who have invested in that company. Institutional investors, domestic investors, foreign investors, retail investors. Yes or no? Yes or no? Now this company, the company gave a balance sheet and the company gave a P&L. They showed this is the total turnover, these are the expenses we incurred. What exactly the P&L gives? What exactly the balance sheet? What exactly balance sheet shows? Dear shareholders, you gave us this much. For example, you gave us 100 crore investment capital. With this 100 crore, we bought almost 60 crore worth of fixed assets and we invested in 40 crore worth of current assets. Are you clear? And we also borrowed loan worth of 50 crore and invested in investments worth of 50 crore. And that's how the total balance sheet got tallied, 150 crore. Are you clear? Now, these assets, they bought these assets, right? What they did with these assets? They generated turnover. Example, 200 crore turnover they generated. To generate this, they incurred operating revenue expenses, approximately 150 crore revenue expenses they incurred, and total profit is 50. So this is how they gave a balance sheet and P&L once they finished 1 year. Once 31st March comes, they gave you this balance sheet P&L. See, last year you gave me this much money. With that money, I did this. That money, whatever you gave, I invested in these assets, I invested in these assets, I invested here. And these are the borrowings which I took extra, and I also invested here. By using all these assets and borrowings, what I did, I generated so much of turnover, I incurred so many expenses, and this much profit is generated. Am I right? This is what balance sheet P&L gives. Yes or no? So this is what the board of directors. Reliance company has 14 board of directors. Reliance Industries Limited has how many directors? 14. Only these 14 people control entire money. The entire money in the company is controlled by whom? Only these 14 people. 20 lakh shareholders' money is controlled just by 14 people inside the organization, and they're coming back at the end of the year and giving you these statements. Generally, majority shareholders, they trusted the company already, and that's the reason they gave the money, and they also trust these numbers. But there will be some shareholders, they will definitely not trust this. How should I know? How do I know these numbers are correct? Suppose Reliance company is saying turnover is 10 lakh crore, profit is 50,000 crore. Some shareholders are asking, they are having a doubt, government is having a doubt, tax authorities are having a doubt, bankers are having a doubt, who are dealing with the company. How do we know the numbers that you showed in the balance sheet and P&L are genuine? How do I know? Okay, do one thing, you send somebody, let him verify, and he will come and tell you whether it is genuine or not. Are you clear? And that somebody is known as auditor. That somebody is known as who? Auditor. So what auditor typically do? An auditor is the one who verify the financial information. What he verify? Financial information. What financial information here? Balance sheet, P&L, nothing but financial statements. For financial statements, what is the source? How financials are prepared? Based on books of accounts. They are prepared based on books of accounts. So the auditor will verify financial statements and books of accounts, and he will go back and tell them whether they are genuine or not. That's it. Am I right? So auditor's only duty is what? He will verify the financial statements like balance sheet, P&L, cash flow, notes to accounts. He will verify books of accounts, and he will first has to ensure are they genuine or not, everything is genuine or not. Then he will go back and tell all the people who are questioning, bankers, government, tax people, shareholders, whoever is questioning, we give one report. What report? We call it as audit report. In that report, we give our opinion. What do we give? We give our opinion on what? On what? Regarding genuinity of the numbers. Whatever the numbers they shown on the balance sheet, P&L, cash flow notes, no, whether are they genuine or not, we give our opinion. Are you clear? Now, how do we give our opinion? How do we frame our opinion? Like how we frame our opinion? How do we give this opinion? It is based on our examination. We verify. What you will verify? For example, no, Reliance company itself, let us take the example. They are having, let us assume 10 lakh crore turnover they are having. What you will verify in this 10 lakh crore? You will verify to whom the sale is made, when they were made. Is it made rightly or not? Are the goods really delivered or not? Is the money really received in the company bank account or not? This is what we verify. Tell me, how do you verify whether somebody made really sale or not? How do you verify? Generally, you just think and tell me. How do you know whether somebody made a sale or not? Some companies coming and telling you, we sold this much goods at this price. How do you verify it is genuine or not? You will see transit copy. Is goods delivered? You will see whether amount is received. You will see GST collected on that or not. You will also see GST return. Cross verify. GST return is something that we file with government authority. In that also you will see whether the sale is shown there or not. Oh, all these points you will cross check with each other, and if everywhere the information is same, you believe it. Am I right? You believe, since everywhere the information is same, you believe that it is genuine. That only you will come and tell the people, yes, it is genuine. So don't worry. Whatever the company showed, whatever the directors showed in the balance sheet, P&L, I know they have taken all of your money. Yes or no? You have invested in the company with a lots of trust, and they finally coming back and saying you this much profit generated, or this much losses generated, or this much turnover generated. These are the assets, these are the liabilities. They're coming back and telling you, don't worry, it is trustworthy. They will come back and tell you. Suppose if auditor finds contradictory position, suppose what is shown in the balance sheet P&L, the numbers is different from what is there in the reality. When auditor verifies, when he go for verification, in-depth verification, when he is doing, he is finding out so many loopholes. So many wrong evidences. The company is manipulating people. The company is manipulating investors. Actual company turnover is not 10 lakh crore. The real turnover of the company is only 2 lakh crore. 8 lakh crore they inflated. Or the real turnover is just 8 lakh crore. 2 lakh crore they inflated. Dummy. You figured out. You will come back and tell them, yes, the numbers are not correct. Your duty is to tell people whether the financial statements are right or wrong. That's it. Your duty is nothing else. Your duty is to tell whether the financial statements are right or wrong. Accordingly, how audit definition has been drafted, the audit definition is drafted like this. Audit is an independent examination. Independent examination of an entity. What is it? Of an entity. The entity can be a company. The entity can be a partnership firm. It can be a sole proprietary concern. It can be a society. Any entity. It doesn't matter. Of an entity. Okay. An audit is an independent examination of an entity, whether or not profit oriented. Okay. It may be profit oriented or not. It doesn't matter. It doesn't matter. Their orientation doesn't matter. Whether or not profit oriented. The size doesn't matter. The company size, the operating size of the company, the hues, the size of the company doesn't matter. And whether or not, irrespective of size, irrespective of legal form, what is the legal form? Is it a company? Is it an individual? Is it a LLP? Is it a partnership firm? Is it a society? Is it a local authority? What exactly? Anybody, it doesn't matter. An audit is an independent examination of financial information. Actually, here there is one more word. Independent examination of financial information of any entity. But I wanted to conclude it last. Okay. So an audit is an independent examination of financial information of any entity. It may be profit oriented or not, irrespective of its size, irrespective of its form, legal form, that and all doesn't matter. Why am I doing this examination? Why am I doing this examination? To give opinion. To ultimately give opinion. If an NGO calls me, if an NGO appoints an auditor, there the duty of auditor is same. Give opinion on the financial information. A well-established profit-oriented company like Reliance Industries Limited, Tata Consultancy, Tata Motors, well profit-oriented entities, all these are. Okay, if they call us an auditor, there also my objective is same. Financial information I will verify and I'll give my opinion on that. Are they right or wrong? That's it. My duty is same. Are they right? Are they wrong? A religious trust, Tirumala Tirupati Devasthanam, for example, they called us, or a church or a mosque, they called us to audit their accounts. There also my objective is same. My objective is remain same everywhere. I will verify your balance sheet P&L numbers and I will go back and tell to the beneficiaries whether they are right or wrong. In every organization, some interested parties will be there, right? In every organization, interested parties will be there, right? For example, for a trust, interested parties are whom? Trustees and beneficiaries. Yes or no? For a company, who are the interested parties? Shareholders, bankers, insurance companies, government, tax authorities, directors, whoever is dealing with that company. We call them as interested parties. So the auditor objective remains the same. Whether it's a small company or a big company, irrespective of size. Whether it is a company or a partnership firm or a society or legal firm, doesn't matter. With what objective they are running that organization, profit motive, wealth motive, service motive, what exactly the motive of the entity, that also doesn't matter. The auditor examines. What he examines? Financial information. We verify financial information and we tell whether they are right or wrong. That's it. We examine financial information with a view to express opinion thereon. With a view to express opinion thereon. Look at it. So what is an audit? An audit is an independent examination of financial information of any entity, whether or not profit oriented, irrespective of its size or legal form, when such an examination is conducted with a view to express an opinion thereon. Clear? So an audit is an independent examination of any entity. It may be profit oriented or not, irrespective of its size, irrespective of its form. When such an examination, audit means verification, examination means what? Verifying something. When such examination is conducted with a view to, what is the objective? Why am I verifying that? With a view to convey, with a view to express opinion on the same financial information. Opinion thereon. Thereon means what? The same financial information. Are you clear? Accordingly, from this definition, we can draw one conclusion. What is the objective of audit? What is the objective of audit? Express opinion. What is it? Express opinion. What you need to express opinion? Whether financial statements are free from material misstatements. There is a new word, material mistakes. So balance sheet P&L I'll verify whether 10 lakh crore, everything, the numbers you shown, are they right or wrong? Are they free from misstatements? Misstatement means what? Something wrongly stated. What is there? Suppose no, your turnover is just 10, your turnover, the company turnover is 8 lakh crore only, but they showed in the P&L account 10 lakh crore. Is it misstated? Is it misstated or not? There are totally 14 directors who signed that this everything is right. Are you clear? Suppose no, the company gave some loan to so and so people, but in the books of accounts, no, in the balance sheet they did not show that loan. They gave a loan, but it was not recorded here. Is it a misleading? Is it misleading or not? Yes or no? They showed profit so much, but that profit is not true. Is it misstated? Exactly. So whether financial statements are free from misstatement or not, that is what we are giving opinion. Suppose we did not find any mistakes. We did not find any mistakes. We will after finishing the audit, we will come back and give a report where we say everything is true and fair. We say everything is genuine, everything is right. We just simply say that everything is right or wrong. That's it, yes or no? So auditor's objective is to express opinion on financials, whether financial statements are free from material misstatements. For now, I will ignore the word material. Okay, I will discuss the word material later. Material means significant. Material means significant, big mistakes. If at all they are very tiny, small mistakes, we don't consider. Clear? And whether they are prepared according to applicable financial reporting framework. Now, what is applicable financial reporting framework? What is misstatement? These terms we need to discuss. Now, again, so what auditor examines in the definition? If you see, an auditor examines, an audit is an independent examination of financial information. Yes or no? Financial information means it includes two things: books of accounts and financial statements. The financial statements are again two types. General purpose financial statements, special purpose financial statements. What are they? General purpose financial statements and special purpose financial statements. General purpose special purpose financial statements means what? If the financial statements are prepared, as per requirement of specific users, if at all we prepare financial statements, we call them as special purpose financial statements. One more important context we need to understand is, tell me what is the context we discuss this subject, financial audit. That too, inside that we discuss statutory audit. We do audit of what? Financials, right? We do audit of financial information. At which financial information? General purpose financial statements. We are learning this entire subject from which angle? General purpose financial statements point of view. You have CA Inter Advanced Accounting. That entire subject is drafted from general purpose financial statements point of view. Accounting standards that you learned, the branch accounts that you learned, the consolidation financial statements that you learned, amalgamation that you learned, everything is from which context? General purpose financial statements context. Are you clear? We do not have special purpose financial statements context in CA Inter. We have special purpose financial statements audit. Okay, audit of SPFS. That context is discussed in CA Final. We have 5 marks weightage on that. Special purpose financials, a dedicated chapter we have in CA Final 8th chapter. Specialized areas, one chapter is there. There we have. In CA Inter, we are discussing completely from which context? General purpose financial statements context. Clear? Now, what do you mean by, first of all, special purpose? See, you will understand what is general purpose only when you understand special purpose. So what is a special purpose financial statements? If the financial statements are prepared exclusively for a particular user, If a company or an LLP, some organization, let us assume company point. Every time we'll discuss from company point of view. But remember, financial statements are prepared by individual, sole proprietor. Financials can be prepared by a partnership firm, LLP, company, society. Anybody will prepare. Even a political party will prepare financial statements. Even the Institute of Chartered Accountants of India will prepare balance sheet P&L. Able to understand? Everybody will prepare financials, but we are discussing generally from which context? Company point of view context. Okay. Now, so a company is there, some company is there, they're preparing balance sheet P&L not for public domain. It is not for public purpose. It is exclusively given for a banker. They're confidential. They wrote, they gave a balance sheet P&L. On the balance sheet also heading, they wrote in the bracket confidential. In the P&L also they wrote in the bracket confidential. This balance sheet, this P&L is given exclusively to banker just for getting a loan. And that balance sheet and P&L, was prepared using cash basis of accounting. What is it prepared using? Cash basis of accounting. Remember, section 128 of Companies Act, books of accounts have to be maintained on accrual basis, mercantile basis. It is mandatory. But here the financials are prepared on cash basis. Immediately, will you punish the company? No, because they were prepared not for general public domain. They were prepared exclusively for private purpose, confidential purpose, for getting a loan. Are you clear? Banker asked, you want loan from the bank? Okay, do one thing. Give me your position of the company and performance of the company in cash. I want to know your cash position of the company and the cash performance of the company. I don't want to see you are giving credit period to so and so. Okay, credit sale you are showing, credit purchase you are showing. I want to know, of course, that also I want. For sure, I want your general purpose financials. But I want special purpose financials which are exclusively prepared on cash basis as per my requirement. Here in this example, the company is preparing balance sheet P&L on cash method, right? Which is as per the requirement of a specific user. Who is the specific user in this example? Banker. Okay, as per banker's requirement, the company is preparing the financial statements right exclusively. These financials are called as special purpose financial statements. Generally, the special purpose financial statements are confidential. They are confidential. They are not kept for open. You won't find in reality on the Google special purpose financials of any company. You don't find it because it is confidential. Are you clear? When they will prepare special purpose yearly, 6 months, or once in 6 months, or once in 3 months, once in a year, when they will prepare? What is the periodicity? Whenever it is the need. There is no specific periodicity. There are some companies which are operating for more than 20-30 years. In their lifetime, they have never prepared special purpose financials because there is no specific requirement. Only when there is a specific requirement to prepare financials as per specific requirement of a user, special purpose financial statements will come into the picture. Am I right? If there is no requirement for me, I don't have to prepare special purpose financials. Yeah, are you clear? So is it mandatory to prepare special purpose financials? No, not at all. But tell me, people gave me money. I'm dealing with their money. Every year, am I answerable? Periodically, am I answerable to the investors? Periodically, I should tell them what is happening with their money. We chosen in India or across the world, the periodicity chosen is 1 year. For every 1 year, we'll come back and tell you what exactly we did with your money. Am I right or not? Tell me here, whether shareholder 1 is asking or shareholder 2 is asking, shareholder 100, shareholder 20 lakh, or whether banker is asking, whether insurance company is asking, whether government is asking, whether tax authorities are asking, it doesn't matter. Every year I prepare balance sheet P&L. Am I right? For whose purpose exclusively? For whose purpose exclusively? There is no exclusive purpose here. General I'm preparing for everybody's. General purpose financials. These financials are called as what? General purpose financial statements. Every year you will see, like you might have, if at all you're following any stock market apps or any like news apps, you will be getting to know, you might have seen so and so company published financial statements, so and so company announced quarterly results, so and so company announced their total financial results. You might have seen that. So what financial statements are they? They are general purpose financial statements. Whenever we think of a company balance sheet, whenever we think of a company P&L cash flow, it's general purpose financial statements. Are you clear? General purpose financial statements means what? That's a very big discussion. Are you clear? By the way, there is something else called financial reporting framework. There is also a word called financial reporting framework. Okay, so that we'll discuss. I'll just stop this video. In the next session, we'll discuss what is a financial reporting framework, all that. Until now, confident? Okay, layer by layer, we are constructing the subject in your mind. Okay, so I'll go I'll be discussing from very basic level. And every topic, whatever I'm discussing, is equally important. Don't think fundamentals. Some students know, some students, they don't watch fundamentals. They directly go to the first chapter. That's which is wrong. You need to watch from the very first topic, because this context is important. Always when you're learning, the context of learning is most important. So we are discussing from financial audit context. We are discussing that too from stat audit context. We are discussing from company audit, that too, company point of view. Clear? And that too, we are also discussing from which financial statements context? General purpose financials. Our entire CA inter audit subject is drafted from general purpose financial statements audit context. So if these points, if you remember in back of your mind, it will be easy for us to understand the subject. Clear? That's it. Fine. So we started discussion on general purpose financials and special purpose financials, right? Yes. Now special purpose financial statements means what we saw. Now let's understand general purpose financials. But before that, we need to understand one term called financial reporting framework. What is a financial reporting framework? First of all, framework refers to rules and regulations. Framework refers to rules and regulations, policies and procedures, guidelines, instructions, any word you can call. Framework means a set of instructions that you should follow, rules and regulations that you should follow. Now here we are discussing framework in which context? Financial reporting context. Okay, financial reporting means what? Preparation and presentation. What is it? Preparation and presentation of financial statements. Preparation and presentation of financial statements. That's called financial reporting. In CA Inter, you have accounting subject, whereas in CA Final, you have financial reporting subject. What's the difference between accounting and reporting? In CA Inter, you primarily learn about how to account the data, how to account the transactions, how to account it. Reporting, you discuss only a basic level. For example, you have in CA Inter preparation of financial statements chapter. You learn preparation aspect. The presentation aspect, the reporting aspect, you will learn in depth in final, CA Final. So reporting means what? See, you can prepare in whatever the way you want, if you want to understand. But if you want everybody to understand, there is a way of preparation to it. Am I right? So presentation is important for when presentation concept comes into picture, when your information, whatever you prepared, is used by others, then presentation is also very important. So preparation and presentation, if at all you are focusing on both the elements, then you are actually focusing on reporting element. Are you clear? Financial reporting framework, set of rules and regulations for preparation and presentation of financial statements is called financial reporting framework. Are you clear? Machinery framework, information technology framework, engineering framework, and legal and compliance framework. The framework word is used again at so many places. We are using which framework? Financial reporting framework is what we are focusing on. Financial reporting framework means framework refers to set of rules and regulations for what? For financial reporting. What is financial reporting? Financial reporting refers to preparation and presentation of financial statements for external parties, for third parties, for somebody else, others purpose. So that's called financial reporting. Now there is another word called AFRFW, applicable financial reporting framework. There is another word called applicable financial reporting framework. What is applicable financial reporting framework? Tell me, based on your basic understanding, do a bank and an insurance company and a normal company like Reliance Industries Limited, do you think all these three prepare financial statements in the same rules and regulations, with the same rules and regulations? No. No. A bank will prepare financial statements with different rules and regulations. An insurance company will prepare with different rules and regulations. And a normal Reliance company, manufacturing trading company, prepares in a different rules and. Do you agree that? Which means the applicable financial reporting framework. What is it? Applicable financial reporting framework depends upon nature of the entity. Am I right? It depends upon nature of the entity. In view of nature of the entity, the financial reporting framework adopted by that entity is called as applicable financial reporting framework. The framework, see, for a bank, the financial reporting framework is different. For an insurance company, the financial reporting framework is different. For a normal private limited manufacturing, a private sector manufacturing company, the financial reporting framework is different. Am I right? So the applicable framework is different for different entities. Am I right? Every entity has to prepare financial statements as per applicable financial reporting framework to that entity. Am I right? Logically right or not? That's it. So there the context is applicable financial reporting framework. Now tell me, when you were appointed as an auditor for a bank, do you check whether bank prepared financial statements, balance sheet, P&L as per normal company framework? You check whether bank prepare financial statements as per applicable financial reporting framework. Am I right? Now once we'll go back to the objective word and then see. The objective of the auditor is to express opinion on the financials, whether they are prepared according to applicable financial reporting. Applicable means what? Suppose I am doing audit of a bank, then I will see whether bank prepare financial statements as per applicable framework to it. Suppose I am doing audit of insurance company, then I will verify whether insurance company prepared financial statements as per applicable framework to it. Am I right or not? And you might have seen schedule 3 in accounts. You might have learned schedule 3 has 3 parts. Yes or no? Part 1, part 2 and part 3. Part 1 is applicable. Schedule 3 part 1 is applicable for normal companies following accounting standards, normal accounting standards. Part 2 is applicable for companies following Ind AS. Have you seen it? You remember this point? Part 3 is applicable for NBFCs. Suppose if I am doing audit of an NBFC, for example, one of the famous NBFC that you might have definitely heard of is Bajaj Finance. Have you heard of Bajaj Finserv, Bajaj Finance, Muthoot Finance? Yes or no? These are all NBFCs. So how an NBFC prepare balance sheet, P&L? They prepare in schedule 3 format only, but part 3 format. A company, Reliance Industries Limited, they prepare balance sheet, P&L, schedule 3 part 2 format. A private limited company, which is not a listed one, they prepare financial statements as per part 1 format. Which means that depending upon the company that you are auditing, the applicable framework will vary or not. Whereas bank will prepare financial statements as per schedule 3 to Banking Regulation Act. Insurance company prepares financial statements as per IRDA financial statements regulations. IRDA has released some regulations for financial statements for insurance companies. As per that format they will prepare. Are you clear? So the auditor's objective is what? Whether financial statements are prepared in accordance with applicable financial reporting framework. That's it, my objective. When shareholders called me, when a company called me to do audit, I have to verify whether financial statements are prepared as per applicable framework. I should also verify whether financial statements contains misstatements, whether they are containing misstatements. Are you clear? All of you. Next. So this is regarding financial reporting framework. Are you clear until now? Yes. Then this financial reporting framework is again 2 types based on how they are presenting. Based on how they are presenting, the financial reporting framework is 2 types. One is fair presentation framework. Another one is compliance framework. But I will discuss these 2 in a chapter called audit report. I will discuss them in audit report chapter. In our book it is 3rd chapter in our book. Okay, there I will discuss what is a compliance framework, what is a fair presentation framework. These are based on presentation objectives. This is based on presentation objectives. How financials have to be prepared based on presentation objective. Compliance framework and fair presentation framework. Are you clear until now? Okay, now Now again, let's go back to one more most important thing. General purpose financial statements. What do you mean by general purpose financials? You know what they say? General purpose financial statements are the financial statements which are prepared using general purpose framework. They say general purpose financial statements are the financial statements which are prepared using general purpose framework. Then what is general purpose framework? General purpose framework is a financial reporting. It's a financial reporting framework. It's a financial reporting framework which considers common financial information needs of wide range of users. Common financial information needs of wide range of users. Tell me, when you go for a bank, suppose a company want a loan and they go for a bank, generally they ask some questions commonly for everybody, whether an individual is going for a housing loan, whether an individual is going for a car loan, whether a company is going for a business loan, or whether the company itself is going for a housing loan. Common questions generally a banker will ask. What they'll ask? What is your company? What business you are doing? How much is the capital invested in the company? How much assets were bought? Where and all the company invested the money? How much profit the company generated? How much the turnover they generated? What expenses they are incurring? Common questions, am I right? Even suppose your friend or some of your friend or some relative or somebody shared with you that they started a business. What questions you generally ask commonly? Which business are you doing? How much capital you invested? How much turnover it is making? How much profit it is making? General common questions. Whether it's a shareholder, whether it's a banker, whether it's an insurance company, whether it's a government, whether it's a tax authority, it doesn't matter. Everybody want to know some common points about a company. Everybody want to know some common points about a company. See, a banker want to know some specific issues. That is not relevant for shareholders. Specific information which shareholder wants may not be relevant for tax authorities. Suppose as a shareholder, I want to know exactly how much profit company generated, to know whether, I want to see how much dividend they're going to declare. Income tax department doesn't bother how much dividend the company is declaring. Income tax department is bothered about profit. Are you clear? So everybody, every interested party, their specific requirements are different, but commonly every one of them will have some common requirements. General purpose financial statements are prepared which will address common information needs of various users. There are so many users of financial statements, right? Shareholders will use, my employees will use, my directors will use, my competitors will use, insurance companies will use, bankers will use, government authorities. Commonly all of them want to know how much I am making money, how much I invested, how much turnover I generated, what accounting policies I am following, how am I preparing these accounts, how the company is preparing these accounts, what methods of accounting they are using, what accounting policies they are using. Yes or no? People have to understand about the accounts, right? So every company will prepare general purpose financial statements which will address common financial information needs of wide range of users. Wide range: shareholders, employees, directors. Yes or no? Insurance companies, bankers, government authorities, tax authorities, so many. Are you clear? So these general purpose financial statements are same for everybody. And this financials is what every year companies prepare, right? Every year auditors will audit, right? What financials are they? General purpose financials. Now remember, the moment we say general purpose means it can be used by anybody. It can be used by anybody. Means the general purpose financials are something where many will use it, many will depend upon it. In fact, foreign investors also will see general purpose financials and then invest in the company. We see foreign company general purpose financial statements and invest in those companies. The financial statements, the figures, the numbers, the stock market numbers, the profit, turnover, all these numbers circulating in the stock market is based on general purpose financial statements. So which means general purpose financials is so sensitive, right? It is very sensitive, right? Because so many are using it. Therefore law will intervene. The lawmaker will interfere in this. What he will do by interfering? He will prepare the framework. Who will prepare the framework? Lawmaker himself will prepare the framework. How the lawmaker will prepare the framework, how he will prepare the rules and regulations, he will take all industry, public opinion, everything he'll take into account, and he will prepare the general purpose framework. Schedule 3, who gave it? Is it the shareholders who designed Schedule 3, or is it the lawmaker who decided? Exactly. Yes or no? Companies Act talks about Schedule 3. Schedule 3 is general purpose financial statements. See, special purpose financials, no need of lawmaker involvement. Or a banker wanted and he told you some rules, you prepare as per that. Why should I involve? So special purpose financial statements, there is no lawmaker involvement, because in a special purpose financials, user is specific person and he is knowledgeable already. Yes or no? He is asking you to prepare financials as per so and so rules specifically to him. So there I will not involve. That's a private contract. But it's a general, when it comes to general purpose financial statements, which are important for the stock markets, which are important for government, which are important for tax authorities, which are important for investors, shareholders, employees, everybody looks into it. So the general purpose framework has to be carefully drafted. Am I right? So the general purpose framework has to be drafted carefully. So the lawmaker will involve in the general purpose financial reporting framework drafting. Able to understand? So accordingly, every law, Companies Act you take, Banking Regulation Act you take, Insurance, IRDA you take, every act you take, financial reporting frameworks were given by themselves. Now tell me, if shareholders want some information, like every year, no, company will collect shareholders what you want, bankers what you want. Do you think a company will collect from all these people and then prepare every year financials? No. Lawmaker gave it already. And if any changes happens to general purpose framework, changes to the framework, only lawmaker can do. Framework means what? Rules and regulations. Are you clear? General purpose framework, who will design? Lawmaker will design. By keeping in mind what points he will design? By keeping in mind common information needs. Commonly everybody want to know about the company some points, right? Financial points everybody want to know, right? Commonly, keeping those in mind, he will decide the framework, and that framework is called as what? General purpose framework. And if the financial statements are prepared using general purpose framework, we call those financial statements as general purpose financial statements. Easy? Yes, that's it. Technically speaking, fundamentals chapter is predominantly over. Just there is one more term that we need to discuss. Once we start reading, we finish everything, and then we'll go back to the term. Are you clear? Next. So now, can I read one by one? Okay. Now, books and financials. Books of accounts. Books of accounts means what? A company, as per Companies Act, no, books of accounts includes records which relates to all sums of money received and expended by the company and related matters, all sales and purchases of goods and services by the company, assets and liabilities of the company, items of cost. So a company has to maintain nothing but what are they? Receipts and payments account. Sales and purchases means nothing but trading and P&L account. Assets and liabilities means nothing but a balance sheet. To prepare a balance sheet, a company has to maintain cost records. What is it? Cost records. So a company has to maintain records of expenditure and receipts. A company has to maintain records of sales and purchases. A company has to maintain records of assets and liabilities, and a company also has to maintain records of cost records. We call 148 section is dealing with cost records. In CA Inter, in audit subject, we don't have this. Okay, whereas in CA Inter law subject, you might have an introduction to 148. Cost audit introduction might be there in CA Inter law paper. Are you clear? So cost records point is not relevant for us. Clear? Next. Now, what do you mean by financial statements? Financial statements are nothing but what? What are they? Financial statements includes what and all? Balance sheet, P&L, yes or no? Cash flow statement, or a statement of changes in equity, if applicable, any explanatory notes which is attached or which is forming part of the financial statements. Remember, notes is not a separate document, it's an explanatory notes. What is it actually called as? Explanatory notes. For example, Reliance company balance sheet P&L is there. Fine, I'll show you the real balance sheet of the Reliance company, and then we'll here onwards discuss practically every element. Okay, yes, just 1 minute. Yes, this is Reliance Industries Limited annual report. Okay, so it has almost like 200 plus pages. Annual report is almost 290 pages approximately it is. You see, somewhere at page number 91, 97, financial statement starts. And I hope you are aware of there are two types of financial statements, standalone and also consolidated. I hope you know it. It is a fundamental assumption from my point of view that you are supposed to know it. Okay, yes. So standalone financials also called as separate financial statements. This is also called as what? Separate financial statements. Okay. Consolidated financials are consolidated everywhere across the world. In all the countries the word is same, consolidated financials, but standalone financials has a different wordings. Okay, so we use standalone. In some countries, no, they use separate financial statements. In Europe, US and all, they use the word separate financial statements. We use the word standalone financials. Both means the same. And here in our in India we use holding company like that, whereas in foreign countries they use parent company. The word they use it was what? The parent company. Okay, so that's it. So consolidated financials means what? A consolidation of parent and subsidiaries, whereas in India it is called as holding and subsidiaries. That's the only difference. Okay, now look at, so the financial statements starts at 97th page. And if you remember in companies, in company law, you might have studied this point. You have this concept called financial statements 129 section 129 in the Companies Act is dealing with what? Financial statements. What section 129 speaks about? There is a subsection 1. That section says every company shall prepare financial statements that are true and fair and in accordance with accounting standards. So this is what they say, and in accordance with schedule 3. This is what the Companies Act 129 subsection 1 says. There is 129 subsection 3. What it says is it talks about consolidated financial statements. Every company which has a subsidiary, okay, or an associate or a joint venture shall prepare consolidated financial statements, and all the rules and regulations that are applicable for standalone financials, the same rules and regulations apply for consolidated financials. This is the point they told in 129 subsection 4. Clear? Nothing but, suppose if you are preparing standalone financials under section 139, compulsory audit, right? Same way consolidated financial statements shall also be audited, which means there will be two audit reports. If a company is preparing two sets of financials, one is standalone and another one is consolidated, the auditor will also give two audit reports. Same auditor. The auditor is same person. The auditor of standalone financials is only the auditor of consolidated. See, auditor is appointed for the company as a whole. We will not appoint auditor for standalone. We will not appoint auditor for consolidated. We appoint auditor for company. Appointment of auditor of a company we say. We don't say appointment of auditor for a financial statements. Are you clear? So the same auditor will audit standalone financials and the same auditor will audit consolidated. But since the same auditor is auditing, he will not give a single report. He will give two reports separately. He will give audit report on standalone separately. He will give audit report on consolidated financials also separately. Don't worry, we have a topic called audit report. There we'll be discussing in depth on this. Confident? Yeah. Next. Yeah, you see here the financial statements actually starts. The first thing in the financial statements they gave is what? Auditor's report. That to which auditor's report? Independent auditor's report. This is called title. This is called title of the audit report. We'll discuss this in the later chapter. Okay, now this is the audit report. You see how many pages audit report? 1 2 3 4 5. Yes or no? See here two sides of a page. Here it is given. Okay, 6 7, okay, 8 9 10 11 12 13 pages. The audit report itself is how many pages? 13 pages. And then you see this is balance sheet, standalone balance sheet of the company. You see the company total, it's the entire balance sheet is given in crores. Okay, so the company has 7,50,000 crore worth of assets, and so total assets is 10,22,000 crore. And then you see they have given here separately liabilities, again same. Okay, and here you see how many, I mean directors are signing, all this directors, everyone are signing. Next this is P&L. This is P&L. This is standalone. I'm showing you, what am I showing you is standalone. In the standalone, what is the total income of the company? 5,48,886 crore. This is only turnover of the company, incomes of the company. Okay, this is standalone turnover. In the example I told 10 lakh crore plus, right? That is consolidated turnover. What I told there is consolidated turnover. Okay, that's it. And then you see statement of changes in equity they gave, then the cash flow statement they gave, then the notes. The notes to account will be approximately 60-70 pages. The notes, what they gave in the notes, you see, they gave first what is this company, and how the above financials are prepared. How they were prepared. Revenue, you said revenue 5 lakh some crores is there. How that 5 lakh crore is arrived? How that 5 lakh crore is arrived? Is it goods delivered value, or is it sales value, or is it amount received value? What exactly is that? Accounting policy will talk about that. Are you getting the point? Accounting policies will talk. So like accounting policies, you know, for various how assets are classified between current and non-current. What accounting policy? Companies following 12 months policy. Companies following what policy directly? 12 months policy. Then PPE, what items, what assets, what are all items comes under property, plant and equipment. They are giving you accounting policy. They're explaining you. Are you clear? Next, how the company will recognize lease, how the company will verify, how the company will account intangibles, how the company will account inventory, how the company will account contingent liabilities, how the company will account provisions. Every accounting policy is clearly given. How the company will recognize revenue. Your accounting standard is right on revenue recognition. You might have studied in accounts subject. That entire points you will be finding here. You see, revenue from contracts with customer is recognized when the control of goods or services are transferred to the customer. Goods are delivered to the customer, only then they'll be recognizing. Similar is what you might have seen, risk and reward is transferred. Yes or no? A similar one. You see here again, all these points, exactly whatever you see in your accounting, only the same will be there. So this is entirely called as what? Notes to accounts. And this is what financial statements typically means. And by the way, what financials are these? Special purpose or general purpose? General purpose. That's why we are seeing it on public domain. Special purpose financials you can't see at all. They're completely confidential. First of all, whether Reliance company prepared or not also we don't know. Nobody knows also. Did the Reliance company prepared special purpose financials during 24-25? We don't know. If so, if at all they prepared, are they prepared for full year, 3 months, 6 months, 4 months? That also we don't know, because special purpose financials are special purpose. They are meant for a specific use. Confident. Now look at. So what do you mean by financial statements? Financial statements includes balance sheet, P&L, cash flow, statement of changes in equity, and any explanatory notes. Yes or no? Who are the users of financial statements? Who are the users? They are shareholders, bankers, government, tax authorities, employees, customers, suppliers, anybody. Employees also will use for various reasons. Why they will use, we'll discuss later. Okay. Next. Now we have standards. Like you have accounting standards, we have auditing standards. The standard means what? It's a benchmark. Standard means established process. Standard is nothing but an established process. You can also call it as instruction. You can also call it as guidelines. Standards are meant to guide you. Okay, we have auditing standards. We also call them as standards on auditing. We also call them as what? SA, standards on auditing. The standards on auditing starts with the 200 number. They actually start with what? 200 number. Okay, and we have standards up to 700 series. In our CA Inter we have up to 700 series. Standards on auditing we have up to 700. Now as per the first standard, that is 200. What is financial statements? Definition they give. Financial statements means what? Definition they give. Tell me, financial statements, we are preparing them in a structured manner. There is a structure to it. What financial statements conveys? They talk about assets and liabilities. Assets means nothing but resources. Income, assets, they are nothing but resources. Expenses and liabilities, can I call them as obligations? Can I call them as obligations? Look at. So what is financial statements? Financial statements definition. Definition of financial statements. Financial statements refers to a structured, what is it? A structured representation. A structured representation of historical financial information. Tell me, Reliance company, no? You right now we saw balance sheet, P&L. Is it dealing with the future or is it dealing with the past? Past. Past means historical. Are you clear? Historical financial information including related notes. We saw, right? Notes, yes or no? So a financial statements refers to a structured representation of historical financial information including notes, yes or no, to communicate. What is the purpose of the financials? What financial statements are communicating you? They are communicating you enterprise, entities, economic resources or obligations, correct? At a point in time, nothing but as on 31st March, or the changes over a period. Statement of changes in equity, you see, in 24-25 what changes happened, in equity what changes happened, P&L 24-25 what happened exactly, yes or no? Generally they said no here, including related notes. What notes generally includes? Notes generally includes, the related notes include summary of accounting policies, yes or no? We saw in Reliance notes to accounts, significant accounting policies, yes or no? Summary of significant accounting policies and explanatory information. What is it also called as? Explanatory. For example, Reliance company, no, balance sheet if you see, debtors, trade receivables, they show some 50,000 crore, 1 lakh crore. This 1 lakh crore, what exactly this 1 lakh crore is? Out of that, less than 6 months, this much is outstanding. More than 6 months, more than 1 year, more than 2 years, more than 3 years. Detailed explanation is given in notes. Suppose in the balance sheet, PPE, property, plant and equipment, 2 lakh crore they gave. What is property, plant and equipment? Can you explain me? It is given in the notes. So notes to accounts will contain explanatory information. Are you clear? Yes, sir. So notes to accounts generally include significant accounting policies and explanatory information. So what do you mean by financial statements? It's a structured representation of entities historical financial information with an intended, what is the intention? Intention is to communicate entities resources and obligations at a point in time or changes over a period of time. And further, the notes ordinarily include, what the notes ordinarily includes? Notes ordinarily includes significant accounting policies summary and also explanatory information. Are you clear? Yes, next. So now let's understand the concept of frameworks. Now let's understand the concept of frameworks. We already know financial reporting framework means we know set of rules and regulations, fall. By the way, tell me, in a company who will prepare financials? Auditor? Huh? No, auditor will verify. I only verify. Auditor's duty is only to verify. Who will prepare the financials? Management. The company's management, nothing but, more specifically speaking, in a company, board of directors. Board of directors are responsible to prepare financial statements, but we simply call them as what? Management. Just for a convenience purpose, we call them as what? Management will prepare the financial statements. Company management will prepare and the auditor will auditor. Yes or no? Now, what is applicable financial reporting framework? What is applicable financial reporting framework? Is the framework, correct? Is first of all a rules. There are first of all some instructions. Who adopted? Adopted by management. For what? For preparing and presenting financial statements, correct? Based on what? Based on nature of the entity. Is it a bank, insurance company, electricity company, normal manufacturing trading company? Depending upon the nature of entity, some framework management will adopt. Depending upon the nature of the entity, some framework they will adopt. Suppose if a bank management is preparing bank financials, they will adopt which framework? Banking Regulation Act framework they will adopt. Adopt means taking it. Are you clear? And objective of the financials. Generally, what is the objective? General purpose. Generally, what is the objective of financials? General purpose financials is the general objective of the financial statements. Yes or no? For example, for a company, the applicable financial reporting framework is Schedule 3 and accounting standards. Easy. Now let's look at two more types of financials: special purpose financials or special purpose framework. Yes or no? Special purpose framework, or special purpose financial statements, anyway you can call it as, okay? If the financial statements are prepared as per special purpose framework for a particular user, then they are called as what? special purpose financial statements. If the financial statements are prepared as per specific purpose framework, special purpose framework for a particular user, then those financial statements are called as special purpose financials. Special purpose framework is a framework designed by a specific user as per their specific requirement. A banker will design the framework as per his own rules and regulations and will be given to the company, and company will blindly prepare the financials as per those rules and then give it to the banker. These are generally confidential in nature. Am I right or not? Then what is general purpose financials? If the financial statements are prepared in accordance with general purpose framework, then those financials are called as general purpose financial statements. Now, what is a general purpose framework? It is a financial reporting framework. First of all, we are discussing frameworks means what? In an entire subject of audit, which frameworks we talk about? We talk about only financial reporting frameworks. So, general purpose framework is a financial reporting framework which is designed to meet common financial information needs of wide range of users. Look at common financial information needs. Common information needs. Which information they want to know? Financial information needs of wide range of users. Like general purpose frameworks have the following characteristics. Okay. Now what are they? They use fundamental accounting assumptions. They comply with GAAP. GAAP means generally accepted accounting principles. They comply with accounting standards, and these are the financials which are prepared annually, which are prepared on an annual basis. Yes or no? We prepare every year 31st March we prepare balance sheet and P&L. Am I right or not? Now this general purpose framework again is of two types. One is compliance framework, another one is fair presentation framework. I am keeping this pending because I will discuss this directly in audit report chapter. Okay, there only we get this discussion. There I will directly discuss. Are you clear? Next, then we have another word called misstatement, but before that I will discuss other terms. Legal form. You know, different legal forms in which businesses are conducted. There are different forms in which a business can be conducted. Yes or no? It is something similar to person definition under income tax law. Legal form, like what are they? Proprietorship form, partnership form, LLP, society, company, AOP, BOI, or any other artificial judicial person. These are all legal forms. Am I right? See, the substance is same in every organizations. For example, you know, any legal form you take, partnership form you take, two persons or more than two persons come together, invest their resources, do some business activity, and share the result. Am I right? In a partnership form, what happens? Two or more than two persons, they come together, invest some resource, do some activity, share the result. Am I right? In LLP, two or more persons come together, invest resources, do some activity, share the result. Am I right? In a company, two or more than two persons come together, invest resource, do some activity, share the result. Am I right? You call it as dividend there. In a partnership firm, you call it as profit. In a society, you call it as again dividend. In all these points, in all this, whether you take a partnership firm, LLP, company, society, in all these cases, what happens in substance is same. Two or more than two persons come together, invest resource, do some activity, share the result. Am I right? This is what happens everywhere. Only the legal form is different, but substance is same. Am I right? Now, you see, here I have used the word proprietorship form. Proprietorship means what? I'm talking about sole proprietor. Okay, suppose you are the only owner for a business, then your business is called as a sole proprietor. Are you clear? So now, you know, in future, no, once you start practice, the kind of questions you get is what, you know, sir, should I incorporate a firm or should I go for a company? Suppose, no, see, there is a concept called AOP. First of all, there is a concept called AOP. AOP means what, you know, two or more than two persons coming together and doing some activity by investing some resource. That's called AOP. If this AOP registers under Partnership Act, that's called partnership form. If the AOP registers under LLP Act, that's called LLP. If the AOP registers under Companies Act, it is called a company. If the AOP registers under Societies Act, it's called a society, corporate society or society. If AOP have not registered anywhere, it's called AOP. Are you clear? AOPs are basically what? Unregistered associations. They are basically what? Unregistered association. And if you see, Partnership Act prohibits any association more than 20 is illegal without registration. Any association more than 20 Without registration is illegal association, they say. Partnership act. That's why if at all more than up to 20 members, you all can associate and can have a partnership form without registration. Are you clear? And you can do business up to 20. Suppose me and my friend wanted to run some restaurant. We both together bought some vehicle, small vehicle we bought, and we started the business. We don't have to register anywhere. There is no compulsion. Is Partnership Act compulsory? Is LLP Act compulsory? Is Companies Act compulsory? Should I register compulsorily in a Companies Act? There is no compulsion. Then why people are registering? Suppose some two people they're doing business. Both of them are three friends together started one restaurant business. They approached me, sir, I want to do some, we three engaged in restaurant, sir. Like, can you guide us how we should do the business? Business part we take care. How to prepare food, how to advertise, everything we know. But legally, how to show our financial picture, how to legally can you just guide us? They asked me. I asked them, all three of you, I just want to know, are three of you, I mean, one is doing with finance, one is taking care of operations, one is taking care of some other stuff in the business, okay, marketing, all that. I asked them, all three of you are ready to share each other's liability also? For example, if one of your fellow do a mistake, if one of your member of out of three, one fellow did some mistake, something wrongly he did, some decision wrongly has taken, because of that huge loss incurred, all three of you are ready to bear equal loss? If the suppose the three of them said yes sir, no, whatever happened, all three of us will take it equally, sir, no problem at all. For his decision making, I am also responsible. For my decision making, he is also responsible. Like that, if they told me, then I will tell them, go with Partnership Act. Suppose they told me, no sir, I don't want to take that risk. Suppose they said clearly, sir, I will invest 10 lakh rupees, sir. If something happened, I'm okay to bear only up to 10 lakh rupee loss. I'm not ready to bear beyond that. Okay, I don't want to have beyond this loss. Then do one thing, go for LLP. Provided in LLP, one point is there, two partners has to be designated. Designated partners should take unlimited liability. Designated partners should take unlimited. Remaining partners can have a limited liability. So I told them, all out of three, two of you should take complete responsibility, complete unlimited responsibility you should take. Are you ready? This I asked them. No sir, we are not ready. All three of us want only limited responsibility. We don't want to take unlimited liability. Oh, then I'll do one thing. LLP was also striked off, in the sense like, it is also ruled out. Now three of you, the only option left is company. If you register your business as a company, take rules and regulations, AOA, MOA, you write everything. Now, since you incorporated as a company, each of your liabilities is restricted only to your decision making. Suppose if one of the shareholder, being a director, if he takes a wrong decision and because of him the company suffered a loss, only that director is answerable. Remaining directors are not answerable. Remaining shareholders also not answerable. So as a shareholder, whatever you invested 10 lakh rupee money, that much only you can risk. Beyond that you will not have a risk. So the company is the only form of organization where you have this kind of facility. Are you clear? Now tell me, when this kind of facility is there, more and more people can do business together. Even though if one person took a wrong decision, I'm not responsible. Okay, at max what I will lose, the money invested I will lose. I will not lose my entire my property I will not lose. So company is famous, that's why. The company form of organization is famous to give this kind of limited liability. Now do you understand? So depending upon the need of the person, we as an auditor or we as a CA suggest them which form is better. Able to understand? That's it. So that's what the legal form. But tell me, an audit, in audit, no, whether it's a company or a partnership firm or LLP or a sole proprietor, doesn't matter. We look at financial information and give opinion. That's why you see in audit definition, irrespective of size, irrespective of legal form. Clear? So legal form means we understood now. Are you clear? Now then we are left with only one term, that is misstatement. We need to first understand, we need to still understand one more term, that is misstatement. What do you mean by misstatement? Clear? Now look at. So tell me, what is the objective? Again, once again, you go back to the objective point. An auditor's objective is to express opinion whether financial statements are free from misstatements. Material word they use, I'm not using it right now. Whether the financial statements are free from misstatements. Company, Reliance company showed this balance sheet and P&L. All the shareholders have got this copy. It is also published openly in the Google everywhere. Yes or no? Now people want to know whether these numbers are right or wrong. Is there any mistake in these numbers? See, I trust the company. They are saying the profit is 35,000 crore. Standalone P&L profit is 35,000 crore. I want to know, is this number right or wrong? Maybe in reality, the company profit are 20,000 crores only. They might have artificially inflated this and showing bigger picture so that they can get more and more funds from the public, so that they can get more and more loans from the public, and suddenly one day the bubble will collapse, the bubble will blast, and the company will become insolvent carelessly. That if at all these numbers are prepared carelessly and attracted more and more investors, is it a loss to the economy or not in long run? So people want to know whether this number is right or not. For that reason only auditor is appointed. Yes or no? What do you mean by this number is right or not? Is it free from misstatement? What does it mean? Is it free from misstatement? Nothing but misstatement. Is this number free from misstatement? Misstatement means what? Misstatement means what? You know the definition, SA 200, again the same standard gave definition of misstatement also. The standard says misstatements can happen in 4 ways. In a financial statement, a misstatement can happen in 4 ways. What are they? One of the ways, amount. Another one is classification. Another one is presentation. Another one is disclosure. A misstatement can happen in 4 ways: amount, classification, presentation, disclosure. Simple example, suppose inventory is there. Inventory, we all know accounting standard 2, inventory has to be valued at cost or NRV, whichever is lower. For example, company cost of inventory is 100 crore. Okay, for example, here itself will take the example. For example, Reliance, they have inventory. How much is the inventory? 89,200 crore, whereas last year 85,100. So current year inventory is what? 89,200 crore is there. So company showed inventory 89,200 crore. For example, NRV is just 70,000 crore, whichever is lower. How much value we should show in the company? 70. But company, let us assume they showed at cost only. Let us assume the company still showed at cost only but not at NRV. Because of this, what happens? 19,000 crore profit has been overstated. Am I right? Will it influence decision making or not? Will it influence decision? All these days we were thinking 35,000 crore profit, but out of it 19,000 crore profit is because of wrong valuation of inventory amount. Am I right or not? So valuation, measurement and valuation mistakes leads to misstatement in amount. It leads to misstatement in amount. So we are concerned with misstatement in amount. Not only this, we are also concerned with misstatement regarding classification. Sometimes, for example, I will show you 2 balance sheets. You just tell me which balance sheet will tempt investors. Okay. Now, 100 crore equity. Okay. 100 crore outside liability. I hope you know what is outside liability. You might have seen this in amalgamation chapter, consolidation chapter also. Third party liabilities, creditors, loans, borrowings, all that. Okay. Next, debentures, all that comes under outside liabilities. Fixed assets of the company 150 crore, current assets of the company 50 crore. This is picture 1 of the company. This is what? Actual real picture of the company. This is a real picture of the company. But what they are showcasing to public, in liabilities they didn't do anything. In fixed assets they showed 50, current assets they showed 150. What they did? Fixed assets they showed 50, current assets also they showed 150. Some fixed assets are there, right? They removed under fixed asset classification and they added in current asset classification. Now they are showing 200, again 200. What's wrong in this? The company director is saying, what's wrong in this? I will classify whatever the way I want. No, not possible, sir. If this balance sheet is shown, you have current assets 50, liabilities 100. How will you pay remaining 50? My question immediately when I see this balance sheet, what I will ask? How you will pay remaining 50? I have fixed assets. No, I will sell them and repay. If you sell fixed assets, how will you do business? Are you clear? How will you do the business if you sell the asset? Able to understand the question? Whereas if you see this picture, are companies has just 50 crore worth of assets. Okay, this company has 100 crore capital, but 150 crore worth of assets they bought. This company has 100 crore capital, but they just bought 50 crore worth of fixed assets. Majority they are having high liquid assets. Now in this company, when I see the company is having positive working capital, am I right? Positive working capital, nothing but current assets minus current liabilities is equal to 50 crore. Company has a cash liquidity. So this company liquidity looks stronger, whereas here the liquidity looks weaker. This is a real position of the company, but the company is manipulating people like this. Are you clear? One day what happens? Company will cannot be repaid. The company has to sell all these assets and then repay. And when once they start selling the assets of the company, fixed assets of the company, how they do the business? Able to understand? See, just by wrongly classifying, how the picture is changing. Able to understand? Classification. Another major mistake, how a financial position can be misleaded to people is through classification. Are you clear? Next, presentation. Next one is what? Presentation. Presentation. Suppose trade receivable, if you see, the company has a trade receivable, how much here? For example, trade receivable, if you see, 15,590 crore is there. Okay, let us go to note number 8. Let us go to note number 8 and see how they presented it. How they presented, we'll see. Note number 8. Yeah, this is one. This is, yeah, you see note number 8. You see here. So trade receivables, they gave something called aging. So they presented 15,500 crore breakup they gave as on 31st March. 15,000 crore debtor is there, but not yet due. Means what? Credit period is still there. As on 31st March, no, 15,000 crore worth of customers, still credit period not expired. They will pay in the next year. Time limit is there. But 545 crores already credit period over. And they were being outstanding for less than 6 months. There are 17 crore worth of debtor who is outstanding for more than 6 months to 1 year. More than 3 years, 3 crore worth of customer is there, which is more than 3 years. Tell me, between all this, which is more doubtful? 3 crore one, this is more doubtful. Why? This due date is long back. 3 years ago it came due date. 3 years back itself due date came, but he didn't pay that time. Even now 3 years over, it's more doubtful whether he will pay or not also, we don't know. Am I right or not? So this is actually called as disclosure as well as presentation. Presentation and disclosure are used interchangeably. Able to understand sometimes? So a debtors has to be presented like this. Are you clear? Further, a company will disclose. Company will also disclose various informations, like how they're disclosing, you see, how they are presenting. First, you see how many were undisputed, how many were disputed, how many of them are considered good, how many of them are considered impaired, nothing but bad, increase in credit risk. How many were impaired, means bad and doubtful. Able to understand? Suppose if they show something here, no, bad and doubtful category, if they show, no, impaired means nothing but doubtful. Okay, if they show here provision, they will create. They will generally create what? A provision will be created. Now this is disclosure requirement. Breakup we should give, right? This is how the presentation. You see here there is a format they followed. If you see there is a structure they followed, that's presentation. Now they're giving details breakup, no, detailed breakup they're giving, no, that is disclosure. What is it actually called as? Disclosure. Are you clear? Now again, you see investments. How are they presenting the investments? How many are current investments? How many are measured at so and so rules? Okay, if this is not required at audit subject, I'm just briefly showing you. Are you clear? So a misstatement can happen in 4 ways: amount, classification, presentation, disclosure. As an auditor, we should try to identify all these types of misstatements in the financial statements, and once we decide, once we conclude, yes, there are no misstatements, then only we give our opinion. Are you clear? Suppose if we find misstatements, we give the same. We mention the same in the audit report. Dear all, these are the mistakes that we found. I will mention the same. Able to understand? Hello? Easy until now? So now what exactly the misstatement definition is? What is the misstatement definition? Misstatement is difference between, what is it? Misstatement is difference between amount, classification, presentation, disclosure. Amount, classification, presentation, disclosure of reported financial statement item. Of reported financial statement item, reported, and amount, classification, presentation, disclosure required as per applicable financial reporting framework. See, tell me, how should we prepare? How should we show the amount, classification, everything? We should show amount, classification, presentation, disclosure as per framework, correct? As per applicable framework, schedule 3, accounting standard, all this as per applicable framework I should show this, correct? But what the company reported is different from what is required as per the framework. For example, the framework says inventory has to be shown at 70,000 crore, but the company reported 89,000 crore. Are you clear? What is to be reported as per the law and what you did in reality, both are different, and the difference is called as what? Misstatement. Are you clear? A company has to show debtors breakup like that. They need to show breakup, but they didn't show in reality. That's a misstatement. A company has to classify some asset as a current asset, fixed asset, but they classified it as current asset. So what is required as per applicable financial reporting framework and what the company reported in the financial statement, what they reported and what they are supposed to report, if there is a difference, and that difference is called as what? Misstatement. Able to understand? Now look at the definition here given. Look at the definition here. A misstatement is a difference between what and what? Difference between a reported financial statement item and that is required under applicable financial reporting framework. So what is reported and what is required to be reported? Yes or no? Required means what? What is required to be reported means what? What the framework says. What the applicable framework. Nothing but what schedule 3 says, what accounting standard says, and what the company did in reality. If there is a difference, and that's called misstatement, and this misstatement can be between amount, classification, presentation, or disclosure. Okay, now you see how the definition. A misstatement is a difference between amount, classification, presentation, or disclosure of a reported item and amount, classification, presentation, or disclosure that is required under applicable financial reporting framework. Are you clear? You see the same definition, how we broke it and then understood. This is how you understand. How you remember, how to remember the subject? You remember it only when you understand it to the core. If you simply try reading it, repetitively 10 times you read, you still don't remember. Now you tell me, a misstatement is difference between amount, classification, presentation, disclosure of a reported financial statement item and amount, classification, presentation, disclosure that is required as per applicable financial reporting framework. See, such a big definition, so easily we remember because we understood it. Are you clear? So understanding meaning is different. Understanding the context is different. Context understanding is most important always. If you understand it, meaning plus context, both if you understand, the better you remember. Clear? Now tell me, why the mistakes happen in a balance sheet and P&L? Like for example, I told, right, mistakes can happen, right? They might happen either because of intentionally they are doing it, or sometimes with ignorance. They don't know how to value, they valued it. Suppose inventory, cost of inventory only they showed. Okay, accountant is telling, sir, that is the cost of closing stock, sir. What wrong I did, he told. Maybe he don't know the subject, yes or no. So sir, accounts, the inventory has to be valued at cost, which is right. But if the NRV is low, then you should show it NRV, sir, because we should show the real picture of the company. I know cost is correct only, it is true only, but not fair. Showing inventory at cost alone is not fair. If the real value, realizable value is lower, what is more fair? Show the real value. Are you clear? Suppose I showed in the balance sheet 89,000 crore worth of inventory I had. People think company has 89,000 crore worth of asset. but actually it is only 70,000 crore. If you go and sell it today, it will only give how much? 70,000 crore. Now tell me, is it fair to show 89,000 crore amount when really it can only give 70,000 crore? Am I right or not? So now do you understand? 89,000 crore is true, but not fair. Showing 70,000 crore is true and fair. Are you clear? Do you understand now the difference between the true word and fair word also? You might have heard this word, true and fair, true and fair. What is true and what is fair? Fair talks about reality as well. Fair looks beyond truth. Are you getting it? The word fair focuses beyond truth. But remember, it can only be fair only when it is true primary. Primary it can only be, primary it is true. Correct? For example, no. 89,000 crore inventory, but market value 1 lakh crore. Can I show 1 lakh crore inventory? No, 1 lakh crore is fair, but not true. That much cost I didn't incur, first of all. My cost is only 89,000 crore. Are you clear? So you can't value beyond the cost. Able to understand? That's it. So now tell me, these mistakes, no, whatever the misstatements that are happening in the financials, it can be because of fraud or it can be because of error. Error means what? If the mistake happened unintentionally, we can call it as error. If the misstatement happened intentionally, we call it as fraud. Are you clear? More in depth about fraud, we have a standard called 240. There is a standard called SA 240. We have it in CA final. Okay, we have it in CA final, we don't have it in inter, but still I will tell you what is a fraud, what is an error. Error means what? Error refers to unintentional mistakes in the financial statements. These errors are clerical errors, misapplication of accounting policy. Yes or no? Like clerical means what? Error of omission. Like one sale happened, there is a sale happened, but company forgot to record. The company forgot to record. Okay, commission, error of commission means doing something wrong, entering wrongly. 10,000 rupees sale value, but the company entered wrongly as 1 lakh. Duplication, he accounted already one sale invoice, but he forgot that he accounted, so he accounted again. Duplication. Compensating, he did mistake in expenditure. In the software, no, you can't rectify. So what he did, he added income also, so that the profit will remain correct. Okay, so next, that's called compensating error. Then misapplication of accounting policy, for example, no, or accounting principle. For example, he purchased one big spare part for a mission. He thought it's a repairs and maintenance and he debited to P&L, but a spare part is a very big amount. That too, it has a separate lifetime. It has to be capitalized as per accounting standard. So no, a capital expenditure he treated wrongly as revenue expenditure. Able to understand? This is accounting principle error. Are you clear? Now the same errors from auditor's point of view, there are again two types: self-revealing error, non-self-revealing error. From auditor's perspective, errors are again two types: self-revealing, non-self-revealing. Some errors, no, in the balance sheet, no, in the balance sheet P&L, the moment I see books of accounts, the moment I see ledger, I will tell this is wrong. I will immediately tell this is wrong. For example, company showed me list of debtors. They gave me a list of debtors. Debtors accounts will have which balance always? Debit balance, or it will be zero balance. But in one debtor ledger in the trial balance has a credit balance. The moment I see debtors credit balance, it's an error. I know very well it's an error. Yes or no? Debtors credit balance is impossible. Suppose, so I opened it and I saw the company. I asked the company, sir, why debtor is showing? Sir, sorry sir, it's actually creditor item, sir. By mistake we classified wrongly under debtors. Looking at it, you can tell it's a wrong. Yes or no? That's called self-revealing error. That error is called as what? Self-revealing error. There are some errors, by looking at it instantly we can't figure out. We need to investigate. Only then we can find out. Okay, suppose a company has repairs and expenditure, for example, inventory value is there. For example, best example, inventory. Company showed inventory value 89,000 crore. The moment I see the number, can I say it's wrong? I should first ask workings. Show me workings of inventory, sir. They showed me cost workings, NRV workings they showed. Then I saw the NRV, 70,000 crore is there. Then I compared the cost. Then I found out there is an error. So non-self-revealing errors are those where auditor has to put some effort to discover. Are you clear? So self-revealing errors are very apparent and they're easily identified from the record. Non-self-revealing, they're not apparent. They require some additional effort from the auditor to detect. That's it. This chapter is over. Fraud. Finally, the word fraud. Fraud means what? Fraud is an intentional act by one or more individuals, yes or no, to deceive, yes or no. Their objective is to deceive, to cheat and gain an advantage, correct? Which is unjustified, which is illegal. Am I right? This fraud is again two types. From financial statements point of view, fraud is two types. One is fraudulent financial reporting. Another one, misappropriation of assets. Generally low level employees will be the right, small employees, in the hierarchy, management hierarchy, base level employees, they do misappropriation of assets, like theft of assets. Yes or no? Warehouse manager, company warehouse manager, stealing some goods of the company and selling outside. Yes or no? That is misappropriation of asset, also called as theft of assets, usually in small immaterial amounts, or misuse of resources. These are all misappropriation of assets. Misappropriation means you are not using it for right purpose, you are using it for wrong purpose. Are you clear? Another one, fraudulent financial. This is what happens in many companies at high level. What they do, suppose, best example, inventory, the manager came and told, sir, inventory NRV 70,000 crore only, sir, but cost is 89,000 crore. I told him very clearly, it's okay, let ignore that, no problem, let's show 89. If I show 70,000 crore, 19,000 crore directly P&L profit will impact. Yes or no? It will suddenly show customers, I mean shareholders, everybody will think company profits are down. No, let's not show that. Intentionally I took a decision that let's ignore NRV, show at cost, so that my financial performance looks better, so that my financial position looks stronger. Is it intentionally done? Is it fraudulent or not? Intentionally, I know it's wrong, but still I reported the same. Intentionally, I reported something which is wrong. Am I right or not? So fraudulent financial reporting involves intentional misstatement. Intentionally you're omitting to deceive users, to make users believe the company is super profit company. Yes or no? Or leading to overstatement or understatement of performance or position. This is called fraudulent financial reporting. Clear? That's it. Fundamentals topic is over. Various terms we understood now. Okay. Then the next chapter that we start is the first chapter. Nature, scope and objective of the audit. Nature, scope and objective of the audit. Now, okay, so fine. Fundamentals, I'll freeze it. With this, fundamentals topic is done. The very next chapter that we begin is NOS, nature, objective and scope, or nature, scope and objective. Anyway, you can call it as. Okay, so NOS audit or NSO audit, whatever. Okay, that's it. Now, I'll just stop this. Now, some students immediately will have a doubt. So, what is the weightage of fundamentals chapter? 120 marks. Because that term you need to understand. Those fundamentals, if you understand only, entire subject you can understand better. Okay, so that's it. So now specifically the next chapter is what? Nature, objective and scope of audit, which has a minimum weightage of 6 marks and sometimes up to 10-12 marks also can come. Minimum weightage is 6 marks. Okay, and this is also very quite easy chapter, nothing to worry. How we discussed fundamentals each and every time carefully, the same way we are going to discuss. Clear?